Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday, so please make sure to like, subscribe and hit that bell notification button. If you are interested in cryptocurrency, make sure to tune in every single day so you can learn about what's going on in the markets here. Good morning everybody in the live chat this morning. Let's see what's going on with the price of Bitcoin here, because again we haven't really seen too much movement within the last 24 hours. If we take a look at this, Bitcoin is currently trading at $42,630 and the 24-hour move is down at just 0.6%. Binance says, are we online? Yes, we are live right now. Let's take a look at what's going on with Ethereum here. Ethereum is set at $2,539, up 0.38% within the last 24 hours. Yes, they've both seen big movements within the last week, but within the last couple of days, things have been pretty flat. So I want to take a look at some altcoins today, see what's going on in the market, see what's performing well in the markets right now. You can see Solana is up 5% within the last 24 hours. We've got Chainlink up 5% within the last 24 hours. But for the rest of the markets, it's looking pretty neutral. Now, I am a big fan of Chainlink, so it's nice to see that moving to the upside. Solana is a token that has been outperforming a lot of the market within the last couple of months. It's been absolutely insane the amount of growth we've seen for Solana. So we will be talking about that later in today's stream. Please don't forget to like, subscribe and hit the bell notification button. We've also got ApeCoin here actually up 11% within the last 24 hours. So a really nice move to the upside here. Somebody's saying something about I still don't get the Holly joke. I didn't have time to read the live chat yesterday, so I'm not quite on board with the joke there in the chat. But if you explain it to me today, I'll see what's happening. Please don't forget to like today's stream. Boris is joining in all the way from the Philippines. Thank you very much for tuning in once again. And we've got Justin P, Bruce, Alex in the chat there, as well as Monkey Nuts this morning. Thank you very much for tuning in. As always, I very much appreciate it. We've got quite a lot of news to discuss today. I want to be taking a look at what's been going on with these ETFs. I know some people are tired of talking about these ETFs right now, but it is still really important. And I think there are a load of new factors in the markets that we need to consider when we are investing and trading. Before these ETFs became live and became a thing, the cryptocurrency markets were really quite enclosed. There wasn't too much information to analyze compared to the traditional markets. If you're investing in a stock, there are loads of different things to consider. When you're investing in Bitcoin prior to these ETFs, there weren't too many factors to look at, to be completely honest, in comparison. So now these ETFs have launched. We have a load of new factors that we can consider when trading and investing, which could make us more profitable. So I want to talk about those different things today. I also want to take a look at Ethereum, the potential of Ethereum ETFs, and if we are moving into an altcoin season right now, because as I just said, altcoins are performing incredibly well. Ethereum and Bitcoin haven't really seen that move within the last 24 hours. So let's discuss there today. Let's first of all take a look at this article here. We've got BlackRock IBIT continues to lead Bitcoin ETF volume among newborn nines. So we've seen a huge amount of money flowing into these spot Bitcoin ETFs, and this ETF has recorded roughly $500 million in trading volume on the third day of trading as of the time this article was written. So BlackRock's Bitcoin ETF has maintained its lead in total volume on the third day of trading, generating buzz about its potential to become the largest holder of Bitcoin. Now, this is something we've all been discussing here for a very long time. Will BlackRock end up just accumulating a huge amount of Bitcoin and taking it out of supply? Potentially. And that's why we've been talking about that supply crunch. What we could be seeing here is a huge amount of Bitcoin being taken out of circulation by all of these ETF issuers who need to back their ETFs with Bitcoin, leaving only a little amount of Bitcoin left on exchanges for people to buy. And when there's that supply crunch and there's that limited supply, and the supply of liquid Bitcoin is decreasing, we could really see the price of Bitcoin soar. Now let's take a look at what's going on here. According to Bloomberg's ETF analyst Eric, BlackRock's position is strengthening, and it's a question of when, not if, they will surpass tech giant MicroStrategy in Bitcoin holdings. So he's analyzed that his analysis has sparked conversations among investors, with many keenly observing BlackRock's aggressive moves in the cryptocurrency space. So the BlackRock ETF, with its impressive inflow and volume numbers, is currently positioned to challenge the GBTC, which is currently considered the liquidity king due to its long-standing presence in the market and a significant amount of holders. So GBTC has been it's been a Bitcoin trust for a very long time. It was unfortunately not allowed to be converted to a Bitcoin ETF a couple of months ago, over a year ago now, but it has finally been allowed by the SEC to convert into an ETF at the same time as BlackRock and Fidelity and all the other massive institutions' applications as well. So we've seen 9 Bitcoin ETFs now going live into the markets, GBTC being one of them, but there is speculation here that BlackRock are going to actually be able to take over when it comes to holding the most amount of Bitcoin because of the amount of inflows the BlackRock ETF is seeing. If we take a look at this, we can see BlackRock actually accumulated 11,500 Bitcoin within the first 2 days of trading. This was actually this number is equal to the amount of Bitcoin that is mined over 13 days. That is a huge number of Bitcoin, and it's worth approximately $497.7 million. So you can see the rate at which BlackRock are currently accumulating Bitcoin. If this continues, I think a liquidity crunch is sooner than we think. I think this is really something that we need to be considering here. We've all been fighting for spot Bitcoin ETFs for a while, saying it could drive adoption massively, but we really need to be considering here that the number of Bitcoin available on exchanges could dramatically decrease. We're seeing a huge amount of Bitcoin being moved out of not necessarily out of circulation, but it's becoming illiquid when these ETFs are holding them, because they're just holding them and storing them for a long period of time. So the amount of liquid available Bitcoin on exchanges is decreasing. And when we have that Bitcoin halving in April, where the amount of inflation for Bitcoin halves, then we are going to see this increase further. So the rate of which Bitcoin inflates halves every 4 years. Now we do have that 21 million maximum supply on Bitcoin, and eventually that block reward will go down to basically zero. So what we're seeing is this slow decline of the inflation rate for Bitcoin over a long period of time. And the next Bitcoin halving is in April, where the inflation rate will halve, making that supply crunch even more obvious to me. So what else we're seeing here is Fidelity Investments FBTC closely follows BlackRock's ETF with notable total inflows of $422.3 million over the same period. Now, we've all discussed here on the channel many times the importance of these ETFs and how we could see a huge amount of inflows and why we've seen a huge amount of inflows. This is majorly due to institutional investments at this point in time. A load of institutions are wanting to get involved in the markets. Even before these ETFs went live, we were seeing funds that were registered as securities changing their documentation so they could allocate some of their funds to get exposure to Bitcoin, whether that be through spot Bitcoin ETFs, through futures ETFs, or through Bitcoin trusts. And we are seeing financial advisors now saying, look, we can get exposure to this industry. If BlackRock, if Fidelity want to get exposure to it, maybe I do too. Maybe I need to be looking at this. Maybe I need to be getting exposed to this asset class. So we've seen a huge shift there when it comes to institutional investors. I think when it comes to retail investors, that will be more of a delayed response. What we'll see is during the bull market, when we typically see all of that FOMO entering the space, that's when we'll really see retail investors looking and trying to get involved and trying to invest in these ETFs as well. But there's a huge opportunity here because it removes that barrier to entry when it comes into cryptocurrency. And as I said, it is taking some of that liquid supply out of the markets for the time being, which really could drive the price up significantly. So that's what we're looking at here with these ETFs. We've got a couple of articles when it comes to these ETFs today. So let's continue on today. I want to talk about this one later. Spot ETF volume nears $10 billion after 3 days trading. So the ETF products have taken the market by storm since they launched, and this is exactly what we wanted to see here. We did not want to see these ETFs flop. We wanted to see success in the markets and see them have a huge amount of inflows, and that is exactly what we have seen here. So this is brilliant news to see here. We've already ran through the numbers today, so I don't want to stay on this one for too long. Please don't forget, before we continue with today's stream, to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. We do these live streams every single weekday, and my throat gets incredibly dry every single weekday. Let's see what's going on in the next article here. I want to get onto these ETF. So Bitcoin is inching up while leading ETFs slide further down in pre-market trading. So we are going to see some new correlations that we've never really seen before in the markets. And this is something I highlighted at the start of today's stream. Now these ETFs have come live. We have more things to consider when trading and investing. And we have more indicators that we can use to help us with our investment. Now Bitcoin is inching up while leading ETFs slide further down in the pre-market trading. Maybe we'll see some sorts of correlation here. So as Bitcoin charts a modest increase, pushing towards the $43,000 mark, an approximate 1% rise over the last 24 hours, ETFs are experiencing a rather contrasting trend, with the pre-market trading showing negative indicators. Notable ETFs such as the IBT BlackRock ETF and HODL ETF have registered significant losses, down by 1.66% and 3.3% respectively. These figures further accentuate the overall downward trajectory since their launch, with both ETFs recording a drop of over 6%. The adverse trend isn't confined to these ETFs alone. Data indicates that the majority of crypto equities has succumbed to a similar fate, with MicroStrategy down 0.27%, roughly 30% down from January's second high at $706. So if you take a look here, we can see movements to the downside here. Now maybe this will be seen as opportunities in the markets. It's really interesting to see these contrasting moves between Bitcoin and Bitcoin related stocks, and maybe this is something to be investigating and maybe potentially taking advantage of as well. There are definitely some more opportunities in the markets now these ETFs have come around. Maybe this kind of volatility is because these assets are new, and over the long term it will kind of pan out and become equal again and kind of move in sequence. But right now there's some contrasting volatility, and it's really interesting to be keeping an eye on, and these are factors that we were not able to really consider prior to this. Let's take a look at what else is going on here. So let's talk about the Bitcoin ETF versus Ethereum's ETF. This is something I really want to touch on today because we've seen a lot of changes in the market since these ETFs launched. Now, when the Bitcoin ETF went live, Bitcoin didn't really move, and it was expected to move considerably. It did not really move. We saw a nice pump up to $49,000, but that was the next day. There was no immediate gains for Bitcoin. However, there were immediate gains for Ethereum. Ethereum absolutely soared. Now, this I expect is because investors were, instead of looking at Bitcoin to see a post-news rally, were looking at Ethereum to try and front-run the opportunity for an Ethereum ETF and see the nice gains that we've just seen in Bitcoin happen with Ethereum. Now, this is possible. This is a potential move that we will be seeing here. We've seen analysts predict that there's a 50% probability that we will see an Ethereum ETF launch by May this year, apparently. So there are some analysts expecting Ethereum ETFs to be just around the corner. So what does this mean for the markets? Obviously, as I just said, people seem to be front-running Ethereum right now. But what will an Ethereum ETF bring to the markets? Let's discuss this quickly. So let's take a look at this article. The ETF showdown, Bitcoin store of value versus Ethereum's technological utility. Now, I think the first thing to note here is Bitcoin's ETF, all of these assets, all of these ETFs are just allowing people to get exposure to the price volatility. You do not gain the advantages of having Bitcoin in cold storage or Ethereum as an asset. When you're investing in a Bitcoin ETF, you are getting exposure to the price volatility, but you are not getting the opportunity to make peer-to-peer payments anywhere across the world. And when you invest in an Ethereum ETF, if they do launch, you are not getting the ability to use decentralized applications and to make transactions, to swap between tokens through decentralized exchanges built on Ethereum. You're not getting that opportunity. You're just getting the opportunity to get exposure to the volatility in the Ethereum token's price. So there is a massive difference here between holding Bitcoin, holding Ethereum, and holding the equivalent ETFs. But price volatility is something that some people are in the market. It's sometimes the only reason as to why people are in this market. A lot of people, yes, in the space are looking for gains. Not everybody is looking at the technical aspects and wanting to use blockchains for their utility cases, which is absolutely fine. So ETFs do the job, but there is a significant difference between holding the ETFs and holding the underlying asset. For one, people come into the cryptocurrency space to have self-custody, to be their own bank, and when you're investing in an ETF, you do not get those advantages. But let's take a look at what's been going on in the markets here. So Over the last few months, the crypto internet has been dominated by the Bitcoin ETF talk, and for good reason. At a $835.7 billion market cap, the pioneering crypto makes up 49% of the total crypto market, consisting of tens of thousands of tokens. In Bitcoin's 15-year life cycle, an ETF represents a pivotal divergence, a milestone in legitimacy, once derided as fraud akin to tulip mania, rat poison, or index of money laundering. Bitcoin's entrance the ETF arena discards those perception rags and replaces it with a brand new coat. So what we did here a couple of years ago was Larry Fink, the CEO of BlackRock, saying Bitcoin is an index of money laundering. We've had all of the insults in the world to be thrown at the cryptocurrency space, but we're still here, and we've now got this, as it says, a milestone in legitimacy. This is a massive change for cryptocurrency, not just in the sense of it drives adoption. This does give a layer of legitimacy to the cryptocurrency space. A lot of people look at crypto and say, oh, it's dead. Oh, it's an index of money laundering. It's a scam. There's loads of problems in the space. It's going to go to zero. We should just ignore it. It's just kind of the Wild West there where people try and steal your money. Do not get involved in the space. This is what we hear over and over again about cryptocurrency. But this has changed because when BlackRock are saying, look, this is an asset that we think you should be investing into, when Fidelity are putting us on the homepage of their website saying, look, but invest in this Bitcoin ETF, when huge institutions are making marketing campaigns to push the investment into Bitcoin, people will no longer say those things. There is a big shift coming in here, and the point of the perception of cryptocurrency is likely to change dramatically with these ETFs being launched. And I expect during this next bull market, we won't hear so much negativity be thrown at the space as we have done in previous cycles. So this layer of legitimacy is something that I really want to emphasize is important here and may help us onboard a huge amount of users in the coming months. Let's take a look at what else has been going on here. So long-term tickling from a deep pool. So having the blessing of the SEC means that institutions can start apportioning their capital into a high yield asset. Bitcoin fits the bill because even more so than gold, its supply is affixed. And even though Bitcoin is digital, it is grounded in physicality via the proof of work mining network. As of October 2023, US ETFs have $5.6 trillion worth of equities. Even in low single-digit percentages, capital trickling into Bitcoin is poised to create a rising tide, a feedback loop owing to Bitcoin's limited supply. Without the hassle of custodianship, investors get exposure to this tide, represented as ETF shares that track Bitcoin's spot price. Just one such Bitcoin ETF applicant is BlackRock. The world's largest asset manager had already lined up capital to the tune of $2 billion according to sources. So following the approval on January the 11th, an expected sell pressure transpired in a classic sell the news event, bringing the Bitcoin price down 7.4% over the week. So we've seen that volatility there. We all kind of know what's been going on there. So let's continue down to here. For many years, it is not clear what Bitcoin would become. After all, Bitcoin underwent over 100 hard forks, splintering the original white paper vision of a purely peer-to-peer version of electronic cash. Bitcoin has changed a lot over the years. I would like to point that out. Bitcoin is here to be a peer-to-peer payment system. Even within the last 6 months, we've seen a huge change when it comes to ordinals, inscriptions, people putting data into their, inscribing data into their Satoshis, putting data onto the blockchain, congesting the Bitcoin network, I would say. But we've seen a lot of changes when it comes to Bitcoin. People are trying to actually right now work on the technology to kind of transition Bitcoin into give it some similar aspects to what Ethereum has, because right now Bitcoin is a peer-to-peer payment system. You can send transactions across the world, but you can't build on this network as such, just like you can Ethereum. And people are trying to do that right now. I think this comes off the back of the hype when it comes to these Bitcoin ETFs, and there's a lot of money flowing into Bitcoin products right now, so that is kind of incentivizing people to try and push harder on this wave and really take advantage of what the Bitcoin blockchain can be. But there are contrasting opinions when it comes to building on the Bitcoin network and kind of building applications, not building applications, but inscribing things into the network, because it does congest the network at times. But it's interesting how much Bitcoin has changed over the years. This is the main point here. So we are seeing these ETFs now going live. Let's take a look at what's going on here. Following the resolution of Bitcoin's contentious block size wars in 2017, the small block is a fraction 1. So this is about all the changes we've seen here. So If we continue down here, Bitcoin cemented its position as true sovereign money, peer-to-peer, but not inherently low friction. Rather, Bitcoin is the foundation for a financial edifice to be built upon in the age of continuous fiat currency debasement via central banking. Decentralized sovereignty overrides low friction, painting Bitcoin as a monetary escape hatch. So a lot of people have said, look, Bitcoin is digital gold, Bitcoin is a hedge against inflation, and Bitcoin can be used as a peer-to-peer payment system. These are kind of the three things that we look at when we are talking about Bitcoin. These are the three kind of pros that we have there. They're the main selling points for Bitcoin and the main reasons as to why people invest in the asset. So it's a hedge against inflation because typically it outperforms inflation. It's digital gold because we mine it, so there's a limited supply of it, and it has some key qualities similar to gold. And the third one, which was it's a peer-to-peer payment system. You can send Bitcoin anywhere across the world and you just need to pay that small transaction fee. It has those low transaction fees, high transaction speeds that we need to send cash instead of the traditional financial systems whereby if we want to send money across the world, it can take days and you have to pass some security checks. There's a whole palaver there to kind of get through. You have to jump through hoops to send money across the world, and it does not occur fast at all. So having a peer-to-peer payment system is really vital when trying to make payments. It's 2024. It really should not take as long as it does to make payments across the world, but it does, and Bitcoin has solved that problem. Let's take a look at the Ethereum blockchain though and look at the differences here. So while Bitcoin pioneered the concept of blockchain-based sovereign money, Ethereum is a work-in-progress infrastructure layer, one that onboards digital assets and supplants traditional financial services. Now, Ethereum is a work-in-progress infrastructure layer. That is a perfect way to describe Ethereum. We are still seeing a huge amount of developments when it comes to Ethereum from the Ethereum Foundation. In 2022, we saw Ethereum change from proof of work to proof of stake. We've seen discussions about how we can keep Ethereum as decentralized as possible, the security of Ethereum. There's basically what we call in cryptocurrency a blockchain trilemma, and this is when we have security, scalability, and decentralization in a triangle, and it's very, very difficult to get the perfect balance of all three. Typically, if you are wanting to balance all three, you have to kind of give leeway to one of the three to make the other two strong. It's very, very difficult to make a network with all three being super strong. So with Ethereum's adaptations over the years, I think this is one of the best ways to build a blockchain. Rather than saying, look, we want to pick two, we'll get rid of the other one and never worry about it ever again. They've said, look, we are going to work as best as possible. As the network grows, then we can look at becoming more scalable. They've changed over the years, adapted to the growth of the network, and continue to adapt with the growth of the network. Yes, Ethereum transaction fees got incredibly high in the last bull market, but the Ethereum Foundation are continuing to work to build on that, to fix that, make it more scalable, and help the network grow. This is so much more important than just creating a project, throwing it out into the environment and hoping that it lasts. Seeing this growth for the project is really, really important. Yes, some people do disagree with the transition from proof of work to proof of stake, but we are still seeing the network continue to be developed by its co-founders and other people within the foundation, and I think that is really important for this industry to see as kind of an example of what we should be doing. There's so many projects in the space right now that just get pushed out into the environment and kind of people cross their fingers and hope for success. We need to continue to see growth of these projects, and we don't want to see 50,000 tokens and projects being launched. What we want to see is developments on our current projects. Having 50,000 tokens, having hundreds of thousands of tokens that have a small team in the industry is not how we are going to see growth. It's basically like building the foundations 50,000 times. What we want to see is those leading projects continuing to grow and develop and become leading projects. We want to see that the infrastructure continue to grow, but because we're in an industry where there's a lot of money flowing around, it's very easy for people to create a project, create a token and just launch them and make some money that way. And I think that's really distracting us from the main goal of pushing blockchain technology as hard as we can push it and really seeing the adoption of blockchain. But that was a complete rant off topic. Back to Ethereum's technological utility. We've seen advantages of Ethereum. Ethereum is a completely different network than Bitcoin. Ethereum, yes, has the Ether token, which you can transact peer-to-peer and make transactions, but the Ethereum network also allows us to build decentralized applications on top of it. So we can have scaling solutions, we can have decentralized exchanges, we can have bridges. There are many different things we can build upon Ethereum to help bring utility to blockchains. So we can see people in the music industry building decentralized applications, in the video streaming industry, any industry possible. We've got Chainlink on there, which helps with supply chains. There's so many different ways that we can use Ethereum to build utility for the cryptocurrency space and help blockchains disrupt different traditional industries. So Ethereum really helps us to develop the space a lot further. There are many other competitors to Ethereum out there that do the same kind of job, but Ethereum has been out there for the longest. It's built the biggest user base, and it has that longevity that attracts people to be an investor of Ethereum. What we're seeing here is, yes, Ethereum ETFs may be around the corner here. I'm going to conclude this up because I've been on so many different rants there. Essentially, what we've seen is Bitcoin is a store of value, digital gold, peer-to-peer payment system. Ethereum is a platform for decentralized applications. Two very different things, but both could be seeing an ETF launch in 2024. Well, Bitcoin's already seen one. We could see Ethereum ETFs launch in 2024, and we do not get to take advantage of their utility. If we invest in these ETFs, we only get to see the volatility in their price movements, which is something that maybe you are in the industry for, not necessarily, you may not be in the industry for utility, but we can see the clear difference there between ETFs and between the utility of these projects and the flaws of investing in an ETF over the underlying assets. There are also pros to investing in the ETFs rather than the underlying assets. Some people don't want to have self-custody. Some people don't want to have 12 words hidden away somewhere which can be stolen and basically you can lose access to your assets. Some people don't want that responsibility. They want to give that over to somebody else, and that's why they choose to invest in these ETFs instead, and that is absolutely fine. Let's see what's going on in the live chat after that big long rant today. Hopefully that was not too confusing there. Let's take a look at what's been going on here. So Boris says we have better weather here as it's so cold in the UK. Bina says talk a little about memes while we are waiting for the move on Bitcoin. Monkeynut says smash the like button, guys. Please do. $500 up this morning. Stuart, congratulations on those trades this morning. James says Larry actually said he was red pilled 3 years ago. So what has he said to badmouth Bitcoin since that red pill? James Fonzie says, I missed most of live updates, been watching tennis. I will watch this after. Hope all well. Thank you very much for tuning in, as always. Please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. Let's see what else is going on here. We need to move on from these ETFs now because I can sense that we're real sick of hearing about them. Grayscale moves $387 million in Bitcoin to Coinbase. Impossible redemption play. So here's some concerns that are hitting the markets right now. Just before the US markets opened on the 16th of January, Grayscale, the world's largest digital asset manager, initiated a significant transfer to Coinbase. The transactions involved shifting 9,000 Bitcoin across 9 separate transactions, each valued at around $43.7 million towards a Coinbase Prime hot wallet for a total of $387 million, according to Arkham Intelligence data. This substantial movement was not a standalone occurrence. Just 4 days prior, on January the 12th, Grayscale was observed making a similar transfer worth $200 million to Coinbase Prime. These large-scale, high-value transactions hit as possible redemption activity on Grayscale's part, an interpretation that takes on weight considering the repetitive nature of the activity. These transfers also underscore the importance of Coinbase Prime, a platform geared towards institutional investors, in managing high-value transactions of this scale. All transactions so far have been before the US markets opened at 2:30 p.m. GMT. So let's keep an eye on this. This is really interesting. This is one of the advantages of using blockchain, where we can see transactions clearly. There's no kind of layer of, we've got that transparency when it comes to the market, so we'll keep an eye on this one. Possible redemption play there, so definitely something to be keeping an eye on today. May impact the price there. Let's take a look at what else is going on here. Leveraged and inverse ETFs are next, according to this article here. So the Bitcoin ETF race has not ended with the approval of a spot ETF, as the race for leveraged and inverse products is now hotting up. So we had already seen futures Bitcoin ETFs in the market and spot Bitcoin ETFs were were rejected for a long time, but now these products have been accepted. We could see leveraged and invest ETFs also hitting the market. So as we can see here, ProShares filings are based on the performance of the Bloomberg Galaxy Bitcoin Index and will be titled as the following. So they have submitted filings for several leveraged Bitcoin ETFs there, and you can see those listed there. The intended ticker has yet to be released, with the ETFs having a planned release date on the 1st of April 2024. Bitcoin ETF performance to date, we've already discussed that today, so let's move on to the next one here. Bitcoin defends $43,000 as Grayscale reportedly sends 9,000 Bitcoin to Coinbase. So Grayscale allegedly sent 9,000 Bitcoin worth $385 million to Coinbase Prime for potential selling linked to redemption of GBTC shares. So we've just been through this article, but I want to talk about it a little bit more now because I want to explain that a little bit better. What we're seeing is when these ETFs went live, we saw a high volume when it came to launch day for the 9 ETFs, but we did see a huge amount of volume when it came to GBTC. Now, Grayscale's Bitcoin Trust has been a Bitcoin fund for a very long time, but it has not been able to transition into an ETF until the day all of these products went live. So with that, we've seen a huge amount of volatility and discrepancy between the value of GBTC's Bitcoin and its share price. And with that, people have been able to invest in GBTC when the value of its shares were much lower than the value of its underlying assets. Now that it's been launched as an ETF, that discrepancy has closed and it's hit zero for the first time in a very long time. So people have made an arbitrage trade there, investing in GBTC when there's a huge discrepancy and selling that GBTC once that discrepancy has gone to zero and made a huge profit. Now, these people are selling because they finished their arbitrage trade. They're also selling because they're looking at alternative ETFs that have lower transaction fees. And that has created a huge amount of selling pressure when it comes to GBTC. And with that, we are allegedly seeing that Grayscale have now sent 9,000 Bitcoin to Coinbase Prime, and it could be that they are selling this Bitcoin. Now, this is all alleged. This is what's being reported right now. As I said, this is one of the beauties of having transparency on the blockchain, but this is something that we should be keeping an eye out for right now. We do know we saw that volume in GBTC. We know the reasons as to why we probably saw that volume, and now we've seen this transaction. We just need to be prepared for that. Maybe this is a slight bearish signal, so maybe this is definitely something to be keeping an eye on. Please don't forget to like, subscribe, and hit the bell notification button before we continue today's news. I very much appreciate it. The more you interact with today's stream, the more we can push the stream to more users on YouTube, teach more people about the cryptocurrency space, and help the industry grow. Let's take a look at what else is going on here in the news today. So Binance's market share dropped 54.2% to 48.7% in 2023. The market share figures for all relevant exchanges have been released. So on Wednesday, Token Insight released a report on exchanges for the 2023 fiscal year. The report covered many areas of exchange data. So in this article, we are taking a look there. Now, I don't want to talk about this one too much because some people are interested in this kind of thing. Some people are just wanting to invest in cryptocurrency tokens. So let me put the link to this in today's chat and you can take a look at this if you want to. Also, make sure to check out the rest of the Crypto Saving Expert website if you have not done so already. So yes, we are seeing Binance's market share dropping slightly in 2023. There were regulatory concerns when it came to the exchange in 2023, so I think this is understandable. Let's take a look at what else has been going on here. So how ETFs affected Bitcoin futures trading in the US. As spot Bitcoin ETFs debut, CME futures trading faces significant decline in open interest and volume. So as the first spot Bitcoin ETF emerges on US soil, its gravity tugs at the landscape of cryptocurrency investment in unforeseen ways. Most fascinating is the pull on the Bitcoin futures market, forging a narrative of investor attitudes reshaped and perhaps market equilibrium disrupted. Data from early January reveals a mysterious drop in futures open interest, notably on the CME. Just as stakeholders began navigating the Bitcoin ETF's debut, the trading volume rollercoaster, coupled with Bitcoin's price volatility, paints a stark picture. But what truly captivated the market's attention was the unprecedented volume of inflows into these ETFs and the exodus from long-established investment trusts. Behind these movements lies a simple yet potent question: are investment preferences signaling a revolution towards direct and potential more cost-effective cryptocurrency exposure? The answer is a few clicks away. So the answer is a few clicks away. That's not what we want to see. So maybe we are going to see some changes here. Spot ETFs may be the way to go. And maybe we are going to see ETFs launch for Ethereum and for some other altcoins as well in 2024. That's what we're all anticipating here and looking at right now. We've seen rumors about Ripple and XRP ETFs this year, but we'll have to see what's been happening there because there's been a huge debate. Ripple is still in their lawsuit with the SEC. So I think we need to see this play out first. But let's take a look. Let's take a look at what the Ripple CEO has had to say about the chairman of the SEC, Gary Gensler. So Gary Gensler, we all know that Brad Garlinghouse, the Ripple CEO, is not a fan of Gary Gensler, to say the least. He has spoken outwardly about Gary Gensler numerous times, with good reason, to be fair. Brad Garlinghouse is the CEO of Ripple. Ripple have been in a lawsuit with the SEC for a very long time now. This lawsuit is over whether XRP is a security or not. Essentially, the SEC and Gary Gensler believe it is a security. Ripple believe that it isn't. How can we have this kind of debate? Well, this debate arises from there being a lack of clarity when it comes to regulation in the US. It should not be subjective to determine whether an asset is a security or not. We should have clear guidelines to help us determine if an asset is a security or not, but the SEC refuses to provide them for the industry, and this is something we've been tackling for a very, very long time. Now, Brad Garlinghouse has accused Gary Gensler of not acting in the best interest of the citizenry and hindering the long-term growth of the economy. So we have seen Gary Gensler really kind of stifling growth of the cryptocurrency space over the last year especially. We've seen the SEC reject spot Bitcoin ETFs over the years. In the last year, we've seen them target major cryptocurrency exchanges, accusing them of listing securities and being an unregistered securities exchange. And within the last year, we've seen them have an ongoing battle with Ripple, accusing Ripple of offering XRP, which is a security. However, the SEC in court haven't really been winning. So we'll see how this plays out. We can see why Brad Garlinghouse isn't too happy with Gary Gensler. And we will continue to see how this plays out. But Brad Garlinghouse has given his views here saying, look, get Gary Gensler out. This is essentially his opinion here. It's been his opinion for a very long time. I think it's pretty clear to see why. Let's take a look at what's been going on with Bitcoin though. Let's take a look at this because Bitcoin, as I said, hasn't been too volatile in the last couple of days. The percentage changes over 24 hours hasn't been too significant. If we take a look at what has been happening here, we are seeing a slight move to the downside today. But if we take a look at what's been going on in the 1 hour chart, since we had that strong move last Friday, we've not seen anything since. We've seen just sideways action. If we go to the 4 hour chart, I think this is the best chart to be looking at this point in time. If we pull this all out right now, you can see we have some significant levels to be looking out for. I think this is a significant level, and this is at the $41,800 level. I think we should also be taking a look at some horizontal levels here as well. So I think a significant one there is between the $41,800 level to the I would say around here. So let's get that perfect. 42,350 to the $41,870 level. That zone to me is a significant level. We've used it as a level of resistance, 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 support, resistance, support, support, resistance, 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 resistance. So we've used this zone many, many different times now for both support and resistant levels. So I'm looking at this zone. Hopefully we do see a nice bounce to the upside from this. Maybe it will take us coming down to this lower level to see that bounce of support. Or we could completely destroy it and fall to the downside. That is still an option. So let's be prepared for that. Let's take a look at some levels of support below this. This is a level of support from back here in December last year and from more recent times on the 3rd of January. That's at $40,760. And there are figures lower than this that we can look at if we want to be super bearish today. If we take a look at the Bitcoin liquidation heat map, let's pull this up. Heat map, there we go. If we go to the coin, is this the correct one? Let's see if we've got the right one up here. This is not what we want. Maybe this is what we want. This is what we want. So what you can see here is the liquidation levels for Bitcoin traders right now. If you take a look at this, there's a huge liquidation level at $41,800. Definitely something to be keeping an eye on there. So that's that lower level of support that we've just been discussing, this bottom level of yellow here. If we take a look at the bigger time frame, so if we take a look at the week, you can see there is also a considerable level of liquidation. Actually, to be fair, it's not looking too bad. I wish there was somewhere between 3 days and a week. I want to be looking from this zone here. We're going to have to get back down to 3 days. What you can see there is that is a key liquidation level at $41,800. So it's definitely something to be keeping an eye on, and definitely to keep keeping an eye on this chart at the moment, because it seemed to be pretty clear in showing what way Bitcoin is going to move. We also have some liquidation points at $43,000, but this is much stronger. So this is something to be paying attention to. But that's all we really have for today's stream. So thank you very much for tuning in. As always, I hope you have enjoyed. Please don't forget to like, subscribe, hit that bell notification button, comment on today's stream. That's all we have time for today. So thank you very much.